tax return likely works fine because you're claiming a foreign tax credit really only for, the Canadian dividends and the employment income, and often you have carry forward. So that's likely not a huge problem, although it's probably not going to be super accurate, or at least down to the penny. But the real problem results in after tax season. Once the Canadian returns in, very often the CRA, the Canadian Revenue Agency, they'll review your foreign tax credit. So what they'll do is once the return's filed, they'll send you a letter, say, we'd like to review your foreign tax credit. And the reason they do that, because so many foreign tax credit calculations that go in every year are completely incorrect. So they'll want to review your foreign tax credit. They'll send you a letter. They'll say, okay, well, you claim $2,000 as a foreign tax credit in your Canadian return. Please show us the calculation. So then what you do is you'll send down the calculation that you did, or whoever, maybe the accountant did, with a copy of your US 1040 transcript and your US 1040 return. They'll get it back in the office. They'll look at it, and if the person that's looking at it really knows what they're doing, which often they don't, but if they do, they'll look at it and say, well, you know what, you claimed foreign taxes based on the withholdings, not on the actual amount of U.S. tax that you paid on your 1040. Then they would readjust, either kick out the amounts. If they're understated, it's not a big deal. But if they're overstated, and they'll kick them out, and they'll just issue you a payment notice for the difference in the amounts.